Gautam Duggad is with us, Head of Research at Motilal Oswal Equities. Gautam, what a day, right? Good afternoon. Thanks for joining us. First, give us a flavor of the mood, the conversation, the chatter. What are you hearing from your sales guys who deal with foreigners? What are they hearing? What are the kind of flows they're seeing? Just give us that sense first.
Hi Prashant. Thanks for having me. See, look at it this way. There is obviously the final tally which is turning out, because now I think 60-65% of the votes have been counted, and the eventual tally obviously is going to be lower than the exit polls, which is what market was celebrating yesterday. And to an extent, today's reaction also includes unwinding of yesterday's big rally that we saw. If you allow the dust to settle down in few hours, I think eventually you will see that the government is coming back with much lesser numbers. Obviously, it's going to be a coalition government now, the way numbers are stacking up. If BJP is at around 240, 245, or wherever it settles, with both of its allies, big allies, JDU and Chandrababu Naidu, possibly somewhere closer to that 300 mark NDA is showing right now. So clearly, we are going back to that pre-2014 era where there is a coalition. Obviously, is going to be a much stronger coalition because the single largest party is going to have around 240, 250 seats. To that extent, the reaction that you are seeing in the market is an unwinding of the expectations that market had set up closer to 370, 400. So today's reaction is a bit of a correction of that. To answer your specific question, obviously people are trying to see through the stock reactions and find where there is value now, because some of these spaces which had seen tremendous rally in the last 6-12 months and which were also on the back of the continuity of a single largest majority that we have seen, which was the expectation also in exit polls. I think to that extent there could be some reversal of trades insofar as sectoral allocations are concerned. So you are clearly seeing the reaction today in the way the PSU stocks have got hammered. In some of the heated up spaces in industrials and railways, they have seen hammering. Real estate have corrected. So as we move forward, there are another 3-4 state elections lined up in October. Depending on the way and shape in which the government formation happens, I think this exercise itself will take another week or so. To that, I think till that point of time, you will keep seeing a lot of nervousness and uncertainty. Once the swearing in is done and you know the portfolios allocated to various ministries, I think that is when people will start again looking at things from a slightly different fundamental lens. As of now, it's a reaction to the verdict as it is unfolding.
Gautam, afternoon. Since we are going back to the coalition politics pre-2014, do you think there is going to be a change in the winners and losers going ahead in the next 5 years?
Rima, I think that will be a function of where the final numbers settle and who gets what portfolios. Because now when you are running a coalition government, obviously the portfolio exercise is slightly different compared to when you have a full majority. Point number one. Point number two, obviously, given the reaction given the reaction that we have seen in the counting so far, there would obviously be some tweaks in the policy. I think you will definitely see some competitive welfareism coming in to, sort of win back some votes that they've lost. If you have 3 to 4 state elections in October, November, I think Maharashtra is coming, Jharkhand is coming, and I think Haryana is also lined up. So you will see some tweaks happening there, but not major, because as long as you have the same dispensation coming back with slightly lower number, the focus on capex, the focus on real estate, the infrastructure creation, I think that should continue. Second, economy itself is in a very fine fettle. We have just closed the year at 8.2% GDP growth. Corporate earnings are in a pretty great shape. We ended FY24 with a 25% earnings growth. Next year's expectations are veering around 14-15%. So to that extent, I think economy is in a very strong shape right now. It's just the tweaks that we have to see and be sure of as to where the government changes its stance. Because so far it's been a one-way street for manufacturing, industrials, capex-oriented stock. Maybe there will be some change that portfolio managers will need to effect now.
Okay, all right. Gautam, just hold that thought. I want to ask you a question on the earnings, but we also welcome Pankaj Murarka, CEO and CIO of Renaissance Investment Managers, who joins us on the show. Hi, Pankaj. Good afternoon. Good to see you, Win. Well, just wanted to finish that point that Gautam was making. Gautam, you're factoring in, I think, a 14-15% earnings growth that you were talking about. So for FY26, the Nifty EPS should be in that vicinity of around 1,300 or thereabouts?
Yeah, our estimate is 1142 for FY25 and 1320 for FY26. We, of course, ended FY24 with about 1,005 rupees. Yes. I think in the preview, we had about 980 rupees. So actual numbers are slightly better than what we had forecasted in our preview for fourth quarter. Oh,
that's interesting. Because Gautam, for so many years we have been talking, most of the years we end up the financial year with the EPS actually that was projected. Actually, by the end of the year, you're lower than that. But good to see that the last year, actually, the earnings were good. So going on a forward basis, actually, the markets are...
No, not necessarily, Nigel. Actually, sorry, just to correct you there.
Yes.
I know that is a perception which is there. That was the case till FY20.
Yes.
FY21, we had seen earnings upgrades throughout the year. FY22 earnings expectations were met. FY23 also markets delivered earnings in line with expectations. And 24 is slightly better. So last 4 years have been slightly different than the previous 5-6 years when we used to begin with 14-15% and eventually end with 4-5%. In fact, last 4 years, as this data is well known by now, FY20 to 24 Nifty earnings compounding itself is 20-23%.
Well, that's right. Gautam, the reason that I said that sometimes it disappoints is because in COVID year, we had a bit of a low base. And from there, as you said, we are beaten for the last 4 years. So kudos to us on the earnings front. But I was just saying that since we have been in touch for the last, say, 10 years or so, a lot of times there was a bit of a miss. Now, looking ahead, given that we are factoring in these earnings of around 1,320 odd, then the valuations are far more digestible, right? I mean, at around 16, 17 times, 17 and a half times approximately, it looks much better than what we are talking about right now of around 21, 22 times odd. Your take on it, and which are going to be the drivers of this earnings growth that you're working with?
So, Nigel, if you're looking at FY26, obviously, you'll find valuations more palatable. Yeah. But right now, we are still in FY25 beginning. We just completed 2 months of FY25. So I would think FY25 will be the right anchor for EPS. And there we are trading somewhere close to 19% now after today's correction. The 10-year average is somewhere about 20 times. So, top down Nifty 20 times, 10-year average, current 19 times, it looks fine. But the problem always is in the sectoral divergences when it comes to valuations. Some sectors are trading extremely, reasonable. I won't call it cheap, but, sectors like banking, PSU banks, some of the IT companies, some of the consumer names also have cooled off a bit in the last 3-4 years. So there the valuations are a bit more palatable. On the other end, you have manufacturing names, industrial names, which have shot through the roof in the last 12-18 months. Stocks have gone up 5x, 6x, and they're trading at 50 to 100% premium to their own averages. So index sometimes belie the actual picture. So while index is at 19 times, within the index there are many sectors which are trading upwards of 30 times. So as far as we are concerned, so far in our model portfolio, we've been running a big overweight stance on PSU banks because of a very strong earnings and very reasonable valuations that they've been having. We've had a big overweight stance on industrials, capital goods, real estate, and consumer discretionary. We've been running a neutral weight on auto and pharma, and we've been underweight a little bit on global cyclicals. But with this event, we need to reassess as to where the government formation eventually ends up, what are the priorities of the new government, whether they continue with their capex momentum, because last 5 years we have seen the government capex budget has gone up 5x, 2.5 trillion to almost 11-12 trillion rupees now we are talking about. So let's see, where the dust settles. And then, of course, you can clearly look at tweaking the portfolio a little bit here and there.
Just taking it back to both our guests, of course, Pankaj Murarka of Renaissance is also in the conversation. And Gautam made that point earlier, away from earnings for a bit. I'm just going back because politics is center stage right now. And Gautam, you made the point saying that it'll be a coalition government, then we see how it goes on. But the fact is, it will be a coalition government. And the fact is, the BJP will be, a couple of notches away from clean majority. Now, this is the kind of political risk premium that the market was absolutely not factoring in, right? We had a clean stretch last 10 years. So just your thoughts, Pankaj, let me give the floor to you. Your thoughts on how the market, now that 19 times forward earnings that Gautam was talking about, how it has to start baking in a bit of political risk as well. We do not know the contours of the coalition and how stable and steady it's going to be as yet.
So the question is for Pankaj or me? Sorry.
Yeah, Pankaj, if you could open your thoughts, and then I want to take that to Gautam as well after that. But Pankaj, great to have you on. Let's hear your views.
Sure. All I'm saying is let's not overplay this political uncertainty, because from the likes of it, at least the way it's looking like is probably we'll have a stable government with BJP being a dominant party and probably some degree of support from the allies. So I still think that as long as we have a stable government, the market should be fine. I don't see a derating of India in terms of multiples or something, because India at the end of the day still remains a compelling investment story when you look from a global investors or perspective, or globally also, because more importantly, the point is India is a secular growth story. In democracies, meaning you have surprises, this is one of those days where probably markets were expecting a much higher number for BJP and NDA, and there's been some bit of a negative surprise. But I still think that what we're looking at, the sell-off, is nothing but a correction in bull market. I think the overall bull market remains very much intact. Also, we need to put this in context. See, last 1 year has been a ferocious bull market. Nifty index is up 40%. Last 10 years or last 20 years, Nifty returns are 15%. Nifty mid-cap index is up 50% last 1 year. So obviously, we've had a ferocious rally in equities in the last 15 months without a correction. It's probably first time in the last 10 years that we had a 15 months run in markets without a meaningful correction. So 10-15% pullbacks in bull markets are nothing but corrections. Corrections always happen when there are trigger points or events which could be either domestic or international. This time, election outcome has surprised somewhat on the negative side. But I still think that from the looks of it, it looks like we'll have a stable government. And as long as we have that in place, I still think that the bull market remains very much intact. I don't see a risk to India's valuation derating. More importantly, I think once we get contours of this government formation and all of that, probably in a week's time, we'll not be discussing elections and stability of government. Probably we'll be talking about economic policies. And I don't see in any manner economic reform slowing down or the momentum slowing down in India in any manner. So I think investors should just take this in stride as a correction in a long-term bull market.
Okay, Pankaj doesn't sound unfazed at all. He's saying just take it in your stride. This will be sort of rear-view mirror talk in the next couple of days. But, Gautam, what do you say? Are we looking at a bit of a new normal with the new political reality? Or can it really go back to business as usual come, Thursday or Friday?
So it'll be all said and done. As I said in the beginning, the same government is coming back with the reduced numbers. Just to give you a bit of a context to the history, 15 years back in 2009, when election results were announced, Congress had won 206 seats, and it was considered as a very strong mandate, and market had hit an upper circuit. Today, with BJP somewhere close to 240, it's considered as a weak mandate. It's considered as a disappointment. It's all, vis-a-vis where your expectations are at the beginning. But as Pankaj said, I think as far as the economic policies of this government are concerned, there will not be much change. Maybe some bit of a tweaks here and there around the state elections. That's possible, because ultimately every government has to win the elections, right? So that is one thing. Second, as I have mentioned in our earlier interviews also, India right now is going through its own mini Goldilocks. Whether it's a 8% GDP growth, 15-16% earnings growth, we've had a very stable currency. Our fiscal control has been in very strong shape. Both current and fiscal account, fiscal deficit. And at the same time, we have seen very decent pickup in domestic savings inflows in equity markets. So that story continues. So once like I said, once the government formation exercise is over, which shape and form this government is ultimately installed, and once that oath taking is done, I think people will go back to normal operating fundamentals and discuss that. But yeah, next 1 week, there will be a lot of news flow around government formation, who's getting what ministry and all of that. So market will obviously have to take that uncertainty or, some bit of speculation around ministry formation till the time it actually happens.
I think there is another leg down, right, which is happening because the market had recovered very sharply. We were down about 950,000 points. We are down about 1340 stocks. A lot of the PSU stocks which had recovered nicely, 6-7% recoveries in many names. I saw PFC, REC, but it's not just that. I mean, it's a whole lot of other names as well, which had seen these sharp recoveries, BEL, HAL. The Adani pack had also all recovered nicely. Adani Ports, for example, was down 12%, is back down about 18-19%. Enterprises, Power. So there is this sort of selling. REC, PFC are down 22-23% each, right? Idea is down 21%, BHEL, GAIL, NTPC, these are all. So there's another wave. It's not done till it's done, and there is more selling which is emerging right now.
I guess, Prashant, also, I mean, I think the question mark is around a lot of these reports of phone calls happening. There's a press conference at 3 o'clock that Mr. Sharad Pawar is going to be holding. So while that NDA number is still looking, above 290, the question is we don't know how the dynamics and the equations are playing out behind the scenes. So I think we really need to wait and watch for another couple of hours.
No, I think we do, as you said, and I think that's what the market is paying attention to. But it's kind of tough to take a view.
To second guess, you just cannot.
So having said that, right, Pankaj, hi, good afternoon. Gautam, let me take this to you first. Give us 3 ideas for our viewers who are watching. Right, you got to imagine what will the situation a week out will be. I mean, assuming that we get there's continuity, the same government continues. Let's not quibble about the numbers. A week, 2 weeks, 3 weeks from now, stocks are down sharply. Many of the stocks are down. Give us 3 ideas where people can look. I mean, if you're sitting on some cash, you can put some money to work, and you can talk about your published list because you have coverage on a wide cohort of stocks. Gautam.
So, Prashant, like I was mentioning, I'll obviously talk about my model portfolio where we have put out our preferred ideas a number of times. So, see, what appeals to us the most right now in our portfolio is PSU banks, because irrespective of whether it's 290 or 320 or 350, if the government is coming back, I don't think the policies are changing much in that regard. We've just seen the earnings season get over. PSU banks have reported fantastic set of numbers. Valuations are back to 1.1, 1.2 or 1.3. That
Gautam, within PSU banks, which is the best bet?
Somewhere about 18-19%. We are seeing 13-14% credit growth also. So that is one of the sector which we like. Second, like I mentioned to Surbhi, hello.
Which is the best bet within PSU banks? We can hear you clearly. But give us names, Gautam. Yeah.
Yeah. Okay. So yeah, we have SBI and Bank of Baroda in our model portfolio. Okay. These are the 2 preferred names that we have in the PSU bank list.
Okay.
We like hotels, we like real estate. These are both sectors which have seen upcycle after a long time. Obviously, the stocks have had a strong run-up in the last 18 months, but the results and operating fundamentals have been fantastic. If you look at the pre-sale numbers of real estate companies, they've done phenomenally well. And we have seen earnings upgrade for last 2 quarters in a row. Now, obviously, there can be another 10-15 correction. Nobody can predict that. But this is a space where the demand-supply, when you look at it from a point of view of demand-supply gap, it's still quite evident there. And lastly, consumer discretionary is a sector which we have a huge overweight on. So whether it's a DMart, whether it's a Titan, they both are present in our model portfolio. I don't think gold demand is going to change much depending on which government is in power. And we have almost 60-65% of the gold demand in a year, which is attributed to wedding season, which obviously is again independent of which government is in power. So clearly the valuations obviously are expensive. So a little bit of a cool off there and those stocks will again look very attractive. So this 2-3 sectors that I mentioned, you can perhaps include auto also in it. We've had a very strong liking for M&M, which is part of our model portfolio. We just posted a very good set of numbers and we are seeing signs of normal monsoons again. All this news about monsoon got clouded in the exit poll results and elections. But if monsoons are normal, it augurs very well for some of the rural consumption oriented stocks. So which is why today you are seeing some bit of, portfolio reallocation towards defensives. Hindustan Lever is up 4-5%, I think, in a market like this today, which is also a reflection of not just the defensive trade, but also the expectation that crude is down and monsoons are going to be normal. Plus in the result commentary, managements have mentioned that across the board, consumer staple managements have mentioned that there is some recovery which is happening in rural. There are some green shoots which are evident. So those are, couple of ideas that I would like to highlight.
Gautam, just a follow up on that, and congratulations to you, by the way, because your call on FMCG came in even before the Q4 results were out, before we heard from the managements. Just a quick follow up on consumer. Are you hearing from clients that they have started reallocation? Are we going to see more of positions get shaved from capex, economy, industrials, moving to FMCG? Are you expecting that shift in the coming days?
So it's tough to say. It's just been 5-6 hours of this results being counted. So that we will see only when the portfolios are declared, which typically happens at the end of the month. But I won't be too surprised. We've been seeing this shift a little bit during the result season itself, especially after the consumer bellwether companies started reporting their results and they started highlighting about some bit of green shoots in the rural consumer demand, because rural consumption has been very, very weak for last 2.5 years. So some of it is already underway. Perhaps it might pick up if somebody wants to increase their allocation a little bit to defensives, given the the government formation exercise can take a couple of days. So you cannot predict things in such a short span of time.